Hello, good day. My name is Yad Aldabug and I'm a Forex Optimum Broker Financial Analyst. I'm back again to bring you all this week's review on some of the interesting topics in financial markets. The money printing press is working worldwide as expected, so the situation is evolving accordingly. New stimulus package to tackle the coronavirus and to help the citizens of the United States is being negotiated. US President Donald Trump announced that the new package worth $1 million would include tax benefits for the companies that will urge employees to resume back to work. According to some estimates, the overall amount of the support extended to bolster economy may top $1.5 trillion. However, Senate Republicans have cast aside one of the President Trump's key demand of a payroll tax cut in their opening offer to Democrats. European leaders have in a 4-day debate finally approved a coronavirus recovery fund of 750 billion euros that may be called unprecedented in terms of the Europe's economy support. New stimulus measures in the US are highly likely to be approved as presidential election race is picking up steam. So Donald Trump will signal a green light to any kind of stimulus measures approved by the Congress. Market reacted accordingly to the S&P 500 broad market index rocketed about 3,233.13 points. And it is continuously rising towards historical highs of 3,393.52 points as well. However, in the midway, it has to close the gap of 3,328.45 points. So, having a look on the other hand side on the gold, which resumed its climbing following the stock market. Gold prices soared to almost $1,900 per troy ounce, making the breakthrough this level possibly by the end of this summer. No less remarkable is that US Treasuries yield continue to slide. The yield for the benchmark 10 years US Treasuries fell below 0.6%. Nevertheless, US rising trade tension may overshadow the bigger picture after White House authorities demand to close a Chinese consulate in Houston, blaming its personnel in stealing the American intellectual property. So, new strains between the two nations may offset positive expectation from the new stimulus package in the United States. Brent crude prices returned on the rising track this week, but this week seems to be associated mostly with the weakening dollar and not the rising demand for oil. US dollar lost 1.2% this week as it's gaining downward traction for the fifth straight week. Now, we may expect the Federal Reserve can flood markets with liquidity and significantly ease the access to loans when needed. This may support crude prices, but few in the markets are willing to push prices up any further, regardless fundamental issues. So the fresh data on crude reserves in the US highlights the reserves are close to maximum levels by 20.5% above 219 levels. Even crude production rose by 100,000 barrels per day to 11.1 million barrel per day. And it is worth to remind that crude reserves are usually dropping in summer driving seasons. So now we have a different picture overall about the crude problem. So we have a risk of crude prices stalling with Brent crude to hold at $44 to $45 per barrel until the global demand for oil resumes its recovery. Well, thank you very much, and that's all for the week. We'll bring you all more updates the upcoming week, which will be keeping you informed about the overall situation in differential markets. Signing off now. Thank you very much.